We spend a ridiculous amount of time obsessing over the brains of the modern world. We look at the newest AI chips, the fastest processors. It's all very cerebral. It's the sexy tech. But we almost completely ignore the heart and lungs.
That is a very visceral way to start a deep dive, but, you're right.
I mean it, though. We talk about the silicon doing the thinking, but never the invisible infrastructure that actually keeps the electrons flowing.
Right.
Without that, the smartest brain in the world is just a useless, inert lump of sand.
Precisely.
Yeah.
And honestly, the power delivery, getting electricity from the wall to the chip without, melting the entire server rack, that is becoming the real engineering bottleneck.
Which brings us to today's deep dive. We are digging into onsemi, that's on semiconductor.
Yep.
We've got their massive fourth quarter and full year 2025 update, which just dropped here in early February 2026. And I have to say, looking through this isn't the boring commodity chip company I remember from a decade ago.
Not at all. They've gone through a huge transformation. They're positioning themselves right at the choke point of, the three biggest trends in tech.
AI data centers, electric vehicles, and industrial automation.
Exactly. Their mission is intelligent power and sensing, which, it might sound like corporate buzzwords.
It does a little.
But when you look at the 2025 numbers, it is clearly a strategy that is paying off big time.
It's a complete pivot. I saw the phrase vertical GaN in the notes and had no idea what it was. But now that I do, I'm actually kind of excited about it.
You should be. It's a game changer for physics, not just for finance.
Yeah.
But we'll get to the molecular level stuff in a bit.
Okay, let's unpack the scorecard first. We need to set the context. How did onsemi actually do in 2025? Because the tech world moves fast, and 2025 was a volatile year.
They didn't just weather the volatility, they optimized for it. So if we look at the headline numbers, onsemi delivered $6.80 billion in revenue for the full year.
$6 billion.
And just in the fourth quarter alone, they brought in $1.53 billion.
$6 billion is a solid number. But, in the world of mega cap tech, revenue can be vanity, right? You can sell $10 billion of product at a loss and go bankrupt. What about the actual health of the business?
And that is where this report gets really interesting. The aha moment here isn't the top-line revenue, it's the efficiency. They reported a free cash flow margin of 23.7% for the year.
Okay, so for the non-CFOs listening, why does that specific number matter more than, say, just net income?
Well, free cash flow is basically the cold, hard cash the business actually generates after it pays all its bills and buys the expensive equipment it needs to keep running.
It's the keepable money.
It's the keepable money, exactly. And a 23.7% margin is incredibly healthy for a hardware manufacturer. But what's startling is the growth. That is an increase of 650 basis points year over year.
Wow, that is a massive jump in efficiency. It implies they aren't just selling more stuff, they're keeping way more of every single dollar they earn.
Exactly. They've shed the low-margin commodity business to focus on these high-value, complex power systems.
Right.
And because they have all this cash, they're doing something incredibly aggressive.
Right.
In 2025, they returned $1.4 billion to shareholders just through repurchases.
And they aren't stopping there. I saw this in the strategic announcement section. They just authorized a new share repurchase program, and the number it's staggering.
$6 billion.
$6 billion. Let's just pause on that for a second. Their total revenue for the entire year of 2025 was $6 billion, and they just authorized a buyback of $6 billion.
It's a massive signal. I mean, usually companies buy back stock with leftover change. onsemi is effectively shouting to the market, we believe our stock is so undervalued and our future cash is so strong that we're authorizing a buyback equal to a full year's revenue.
That's confidence bordering on arrogance, but in a good way if you're an investor.
Yeah.
But you have to ask, where do they think this future cash is coming from? Because buybacks are great, but they don't invent new technology.
And this brings us right to the hot topic, the one everyone wants to talk about, the data centers, the engines of the AI revolution.
Right. We all know AI eats electricity for breakfast. I've read horror stories about how much power these new training clusters consume.
It's a very real problem. As these server racks get denser to handle more computation, they get hotter and hungrier. And the traditional way of delivering power, just, plugging it in, so to speak, it doesn't work anymore. It's too inefficient. You lose too much energy as heat.
And this is where onsemi steps in. They claimed their AI data center revenue exceeded $250 million in 2025. That seems like a pretty quick ramp up.
It is, and it's all driven by what they call the power tree.
The power tree, I love that image. It sounds like something out of a sci-fi novel. Break that down for us. What does it actually mean?
So onsemi isn't just making one little component. They're providing the solution for the entire chain of electricity.
The whole path.
The whole path. Think about it. It starts at the utility grid entering the building. Then it goes to the server rack, then to the board, and finally all the way down to the tiny pins on the processor itself.
From the thick cables outside to the microscopic silicon inside.
Exactly. They play in every single stage of that tree. And the industry is going through a massive shift to handle this power density. We're moving from what was traditionally a low voltage standard around 54 volts to high voltage direct current, specifically 800 volts.
800 volts. Why that number? What does stepping up the voltage actually accomplish?
Think of it like water in a pipe. If you want to move a massive amount of water or energy, you have two choices. You can get a wider pipe, which is heavy, expensive, and takes up a ton of space.
Okay.
Or you can increase the pressure.
So voltage is the pressure.
Exactly. By jumping to 800 volts, they can push massive amounts of power through smaller cables with far less resistance. Less resistance means less heat waste. It's efficiency through physics.
And onsemi is betting big on this. The source says the total addressable market, the TAM for AI data centers, is projected to grow at a 40% compound annual growth rate.
40%, reaching $12.2 billion by 2029. That is just hyper-growth. You rarely see that in established hardware sectors.
Wow.
But here's the catch. You can't handle 800 volts with standard computer chips.
Because they would just fry, right?
Standard silicon would melt or just break down instantly.
Yeah.
To capture that $12 billion market, you need better materials.
Which brings us to the science part. This is where we get into the alphabet soup that actually matters. Siccity and GaN.
Silicon carbide and gallium nitride. These are what we call wide bandgap materials.
Okay, let's de-jargon that. Wide bandgap, it sounds like a clothing brand for oversized shirts. What does it actually mean for the electrons?
In simple terms, the bandgap is the energy required to get an electron to conduct electricity. So a wide bandgap material can withstand much higher voltages and temperatures than regular silicon before it fails.
So it's just tougher.
It's tougher. It allows you to switch power on and off incredibly fast with almost no loss.
So better chemistry leads to smarter AI because you aren't wasting energy just cooling the room down.
Directly. If you don't need giant fans and heat sinks, you can pack more compute into the same rack.
Huh.
But onsemi went a step further in this report. They announced innovative vertical GaN technology.
Here we go. This was the part I wanted to get to. I highlighted it because it just seemed significant. Vertical GaN. As opposed to what? Horizontal GaN.
Lateral, yes. And this is a fascinating bit of engineering. Traditionally, gallium nitride devices are built so the current flows sideways across the surface of the chip.
Okay.
Imagine a long, flat hallway where people have to walk from one end to the other.
Right, standard traffic flow.
Vertical GaN is like a skyscraper with an elevator. The current flows from the top surface straight down through the material to the bottom.
And why is that better?
Density and volume. If you move electrons vertically, you're using the whole volume of the material, not just the surface. You can handle much higher current and voltage in a much smaller footprint.
It's the difference between urban sprawl and a high-rise. You get more utility out of the same square footage.
That is a perfect analogy. And onsemi isn't just talking about this. They are building it right now. They have a facility in Syracuse, New York, a 20,000 square foot clean room dedicated to this.
That's interesting because the narrative is usually that all advanced chip manufacturing is overseas. onsemi is keeping this proprietary tech in New York.
It's a strategic choice.
Ooh.
And they're pragmatic. For their lateral GaN products, which are still very useful, they are collaborating with companies like InnoScience and Global Foundries. But for the cutting-edge vertical GaN, they're keeping that recipe very close to the vest in Syracuse.
It's interesting to see them balance that make versus buy decision, but we can't spend the whole time on data centers, even though they're the shiny new object. onsemi has a giant legacy business that's also transforming. Let's talk about cars.
The automotive sector, yeah. This is actually their largest projected market. They estimate a total addressable market of $26.3 billion by 2029.
That is double the size of the data center market.
It is. And while everyone talks about EVs, there's another huge side to this, sensing.
Right, because modern cars are basically becoming robots with wheels.
Exactly. onsemi has an installed base of over 600 million automotive sensors.
600 million. That is just a wild number.
It's everywhere. ADS, your advanced driver assistance systems, surround view cameras, backup cameras. But the new frontier they mention is in-cabin monitoring.
In-cabin monitoring, like watching the driver, that always sounds a little dystopian to me.
It can feel that way, but it's becoming a safety standard. The car needs to know if you're looking at your phone, if you're falling asleep, even how passengers are seated so it knows how to deploy airbags safely.
I see.
Their technology isn't just moving the car, it's the eyes of the car.
So they power the wheels with silicon carbide inverters, and they provide the vision with sensors. That's a powerful combination. And then there's the third pillar, industrial, which I feel like is the unsung hero of the whole economy.
It really is. We are talking about medical devices, energy infrastructure, factory automation. And the problem in industrial isn't just power, it's translation.
Translation between what?
Between the real world and the digital world. You have analog signals, temperatures, pressures, light levels, and you have digital processors. Getting them to talk to each other is notoriously difficult.
Oh.
onsemi is pushing a platform called Trio to solve this.
TREO. What is that exactly?
It's an analog and mixed signal platform. Think of it as a universal translator. It standardizes how these sensors talk to the processors, and they doubled the number of products on the Trio platform just in 2025.
And their design win funnel for Trio now exceeds $1 billion. Design win is just chip speak for we got the contract, right?
Essentially, yes. It means engineers are designing onsemi's Trio chips into their future products. And once you're designed in, it's very hard to rip you out. It's very sticky revenue.
So we have these three massive, complex verticals. How do they actually orchestrate all this manufacturing? Because chip manufacturing is notoriously hard and expensive.
Yeah.
One bad forecast, and you're sitting on empty, expensive factories.
Which brings us to their operational strategy, which they call Fab Right.
Fab Right. It's catchy. Is that just a fancy marketing term for outsourcing?
It's more nuanced than that. It's a philosophy. So in the past, chip companies felt they had to own every single factory or fab to control quality.
Yeah.
But that's incredibly capital intensive.
Right.
Fab Right is about optimizing. They keep the high-value proprietary stuff like that vertical GaN in Syracuse internal.
The standard stuff.
They push that to external partners. This gives them flexibility. If there's a global recession, they can cut back on external orders without having to shut down their own factories. If there's a boom, they can ramp up capacity without spending 3 years building a new plant.
It de-risks the business dramatically.
Exactly. And the financial goal of this whole strategy is to hit a long-term gross margin of 53%.
And for context, they're currently sitting around, 38% for the fourth quarter of 2025. So getting to 53% is a massive leap in profitability.
It is ambitious. But if they can fill their internal factories with high-margin products like silicon carbide and vertical GaN and outsource the lower-margin stuff, well, the math actually works.
So let's look at the crystal ball. They gave guidance for the start of 2026. What are they telling us to expect right now?
For Q1 2026, they are projecting revenue between $1.435 and $1.535 billion, so roughly steady with where they ended 2025. They expect operating expenses to be somewhere between $407 and $422 million.
Steady is good, but steady doesn't justify a $6 billion buyback.
No, the buyback is about the long-term vision. They're projecting a revenue growth CUER of 10 to 12% over the next few years.
Which, according to their presentation, is growing about 3 times faster than the overall semiconductor industry.
That is the key stat. The chip industry as a whole is cyclical and slow-growing on average. onsemi is trying to decouple from that average by attaching themselves only to the high-growth rockets, AI and EVs.
They want to outpace the market, not just ride the wave.
Exactly.
It really is a complete transformation. You know, putting all this together, it feels like onsemi is making a very specific wager on the future of physics.
How so?
Well, they aren't betting on which AI model wins ChatGPT or Gemini or whatever's next. They aren't betting on which car company wins Tesla or BYD or Ford. They are betting that whoever wins will need to move electricity more efficiently than we do today.
That's it. They are the arms dealer for the war on inefficiency. You can have the best software in the world, but if your power architecture is stuck in 2020, you just can't scale. onsemi is solving the physical limits of computing.
So for the listener who is maybe just casually following the chip wars, why should they care about onsemi?
Because they are the enabler. The next time you read about a breakthrough in AI or a new EV that charges in 10 minutes, don't just look at the logo on the hood or the name of the software. Think about the power architecture underneath. Think about that vertical GaN chip in Syracuse that is physically managing the electron flow to make it all possible.
It's the stuff that makes the stuff work.
Precisely.
Now, before we wrap up, I want to leave everyone with a thought that struck me while reading the Same Harbor statement. You know, the legal text everyone skips.
The fine print, the risk factors.
The fine print talks about all the risks, obviously. But combine that with their actions. They're authorizing a $6 billion buyback, emptying the piggy bank to buy their own stock, while simultaneously pouring money into a brand new, cutting-edge technology facility in New York.
They're burning the candle at both ends, financially speaking.
Exactly. They're placing a massive double-down bet on their own technology. They aren't diversifying into software or media. They are saying, we can control power better than anyone else. If the world's hunger for power is the hurdle everyone fears, onsemi is betting the farm that they are the ones building the ladder to get over it.
And if they are right, that ladder is going to be worth a fortune.
That's the deep dive for today. Thanks for plugging in with us.
Always a pleasure to power through the details.
We'll catch you on the next one.